Hello everyone, the chart guys have been working on an introductory technical analysis course for some time now, and after surveying hundreds of traders, we narrowed down what the most sought after information was, and we created this course, Entry and Exit Strategies. It's over 5 hours in length, and we go over different signals that the charts tell us for when to buy and when to sell. If you are the kind of trader that is still looking at charts and not realizing what it is trying to tell you, still feeling a little bit overwhelmed, this course is designed to alleviate that uncertainty. So the course outline, we're going to go over the psychology of trading, establishing a game plan, recognizing the different indicators signaling bullish and bearish entries, being able to identify support and resistance levels, poor entries where traders make mistakes and how to avoid them, exit target, knowing where to sell your positions, where to place stop losses to keep those losses minimal, my personal preparations, how I get ready for the trading day, and then piecing it all together, looking back at everything we just learned and applying it to the real world. As a bonus, we'll also look at an intro to finding entries and exits with patterns, and you'll recognize these patterns on all kinds of time frames throughout the stock world, so certainly beneficial to be able to trade off of those as well. So we hope you will check out this course, and again, we feel it will build a foundation of technical analysis knowledge that experience will build off of and send you on the right direction to making more profitable trades. Checking in on Netflix, looking at the daily and weekly, and we had a nice breakout early in the week, and to end the week it was normal healthy consolidation in my opinion because we have decreasing bear volume, and after a breakout, pulling back, reestablishing a new support level is normal and healthy. So we had our previous low from initial consolidation down here, 110.68, that's the election dump low. Then we saw a high on the bounce, pulled back, formed a higher low at 113.95, and then that higher high right here, this candlestick, was the indication that the bulls were very strong as we broke above the highest price we had seen in a few weeks. And because of the magnitude of the dump on the downside, November 10th, we had not a lot of resistance up through that level. So a nice bullish reversal hammer, confirmation with a big green candlestick, and then an inside candlestick. This was a nice day trade to be had where we had the break of 120.75, the high of the inside candlestick. That was indicated on December 6th, and then we saw a big time breakout from there. So that was a nice inside candlestick bull signal. So from here, we're going to be looking at the low 121.73 of this consolidation. If we continue to pull back, the middle Bollinger Band will be a factor in the mid 118 area to start this week. And resistance is the high we've seen, 126.35 on this move. And then there's not a ton of resistance until back at the breakout high at the end of October up at 129.29. You put your cursor up on 128 psychological resistance, and you can see all these rejections back at the end of October. So a close over 128 would be a very bullish indication if that were to occur before the end of the year here. On the weekly time frame, we can see pretty much all of 2016 we are still in a nice uptrend with higher lows, tightening range, clear bull break, consolidation, and now attempt at continuation for the bulls. Oftentimes after a big breakout or a breakdown, you'll see what I call reaching an equilibrium, where you have the consolidation low, a lower high is hit, and then you pull back, form a higher low, lower high, tightening range before a clear break. And that's exactly what occurred back here. We had the all-out dump at the end of 2015, bounce high, higher lows, lower highs, tighter, 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 and then a clear bull break. So opposite direction there. This is going to be consolidation and equilibrium after a breakout. And we'll see if this candlestick with a long upper wick showing profit taking this week does mean that we are going to pull back towards the mid-teen area, establish another higher low, and then continue to tighten up. Key resistance will be back here, 132.27, 133.27. And we can see we hit a lower high on that breakout in 2016. So let's zoom out and get a bigger picture here of everything that's gone on coming from that all-time high. So there is still a clear resistance there, and let's actually throw up a trend line and see where that resistance would show up these days. And look where we're rejecting from. So let's zoom back in here and see just how close this downtrend resistance line is to being hit. Looks like we pulled back from just under that this week, and perfect resistance at that point. So definitely worth keeping an eye on. So I appreciate you watching. Hope you have a great Sunday, and we'll see you soon.